Hello there. Welcome back to Financial Accounting 85. In this video, we want to look at the preparation of the income statement and appropriation account. We also want to look at the preparation of the appropriation account. So it's the preparation of the income statement and the preparation of the appropriation account. So our question reads, and the information presented below is from the records of K Costos for the financial year ended 29 February 2016. K Costos is a partnership with partners Kate and Corey. So given the pre-adjustment trial balance is at 29 February 2016. So if you go through, you would see that beneath this pre-adjustment trial balance, we are going to have some additional information that you need to go through before you start to answer the question. So this is what we have. So if you go down, you see that this is the information that we have on the first page. Then if you go to the next page, you see that we've got a continuation of this additional information. But what is very key in terms of this question on partnership is the section that we have that is stating the partnership agreement that you need to comprehend and understand the terms of the partnership agreement. Remember, partnership agreement explains the terms and conditions on where the partnership is going to operate. So we have got the issue of salaries being stated, the issue of interest on capital, the rate being stated, and then interest on current accounts, and also interest on drawings is also supposed to be stated. But according to this question, we are seeing that we are not having the issue of interest on drawings. And in terms of the profit sharing ratio, again, it's also stated in the partnership agreement. So very important for you to go through it before you answer the question. So you'd see that the profit and loss reads the remaining profit or loss is distributed in the ratio 2:1 between Kate and Corey. So basically what it means is Kate is 2 and then Corey is 1. Then you can make a proportion. But all the required part, if you go there, you'd see that it requires you to complete the income and appropriation statement for the year ended 29 February 2016. And the question has got 33 marks. Then we are also going to prepare so in this case, we mean that our 1.1, we are going to have an income statement, and then beneath the income statement, we are also going to prepare an appropriation statement. So this is what we have. So we go to our answer section now. If you go to our answer section, you see that we have a layout of the income statement. So this is the layout of the income statement that we have, and obviously we are going to start with the figure for sales. So we can go there in our question and try to see what figure for sales do we have. So we have got 132,210 as our sales here. So, but having our figure for sales, you don't have to take it as it is. You have to check in the question if you've got any data allowances or sales and returns that are stated in the question. Because if they are there, you have to subtract them from sales so that you get the net figure for sales. So if you go down, checking for sales returns under the nominal account section, sales returns or data allowances, you'll see that we don't have such. So if you don't have such, you also have to go to extra information to see if there's any transaction that is affecting our sales. So you're going to go through everything by checking if there's any transaction that you see that is affecting your sales. So you go, you see the first one is saying a debtor who owed 580 rands was declared insolvent. This instead paid 35% of his debt, and this has been correctly recorded. You are seeing that this is an adjustment that is going to affect the profit or loss account under the less operating expense, whereby the part of this debt is going to be written as a bad debt. So it's going to increase the figure for bad debt. So this is what we have. So go to the next page again, checking if you have got anything that is affecting sales. So you go through everything. But if you look at it, you see that in this question, we do not have anything that is affecting our sales. So you can take the figure that we are having in the list of balances as it is. And we have got 432,210. So we come here. We say 432,210. Then from there, you're supposed to go to less cost of sales. And then we go again in the question. We check if you have got cost of sales. There, remember, cost of sales in some questions you have to calculate it. In some questions you are given it as a as a calculated figure. So if you let's go and check if we have it, we are given it. So you see that we have got the figure for cost of sales here, which is 270,130. So you see that in some questions you won't be given the figure for cost of sales. So you have to calculate it by using that formula, which says so that the calculation will be beneath the heading of our cost of sales. That says our cost of sales is supposed to opening stock and your purchases. If they are returns that are there in the question, you're supposed to subtract purchase returns. You add your carriage inwards. If there are custom duties, you are supposed to add them again, and then you close your closing. You subtract your closing stock. Then you get your figure for cost of sales. But in this question, we have it there is already calculated, so we can just take the figure that we have. So before you enter 270,130 as the cost of sales, you go through additional information again, try to find out if there's anything that is affecting the cost of sales. But in this question, we don't have anything that is affecting our cost of sales. So we are taking the figure that we are given here as it is, which is 270,130. So we come here. And then I will subtract there 432,210 minus 270,130. You get 162,008. And this is going to be your gross profit. So the formula that we have for finding our gross profit is sales minus cost of sales. So this is what we have. Then I will go to the other income section. So we're going to check under the nominal account section again, what other income do we have? So we are seeing that we have the first one that we are having here, which is rent income, which is 37,200. But before we enter it, you have to go through additional information to see if there's anything that is affecting the rent income so that you can adjust it. So if you come down, you see that here it's written the rent increased by 200 rands in 1 December 2015. The tenant has paid the rent until end of March. And we know that our year is ending let's just check where our year is ending. Our year is ending on 29 February 2016. And we are told that in additional information, the rent for March 2016 was received. So it means this is a receipt in advance or a prepayment of an income. So whenever we have a prepayment or an advance of an income, we are supposed to subtract from the figure that we are given in the list of balances. Remember, the figure will be given in the list of balances indicate the actual amount that was received. And then, but we are being told that the actual amount that was received is more than what was supposed to be received for that period. So the portion that it does not belong to this period, we need to remove it. So, but we need to calculate so that we can see the monthly rate that was received for March. We are not given it here, so we need to make a calculation by formulating a formula. So we are saying the rate increased by 200 on 1 December 2015. So we need to find how many months were there before it increased. Remember, the year is ending end of February. So we are saying March, April, May, June, July, August, September, October, November. Then 1 December, the rate increased. So we're saying 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're having 9 months before it, 9 months before it increased. Then after it increased, and there we are now saying December and January, February, and then for March again it was received. So 1, 2, 3, 4. So the figure that we are having in the balances is for 9 plus 4, which is 13 months. So we need to remove the extra 1 month so that we remain with 12 months in a year. So what we are now doing is to formulate a formula. So let's just try to see how we can go about it. So the formula that we are going to formulate is, let's just try to see. We are saying, we are saying maybe we can just assume that the rate that is before it increased, it was X. Let the rent equal to X. We say before it increased, it's 9 times X, which is 9X. And then we add after it increased, then we add after it increased, it's now 4 months, and it increased by 200. It was now X plus 200. and then you get the total that was received. Remember, we're saying what we are having in the case of balancing is for 13 months. So we come here, and we are seeing that the rent income that was received is 37,200, and then we decide say equal to 37,200. So we can just work it out within that context. So we are saying now, if we remove brackets, it becomes 9x plus 4x plus here it becomes 800 equal to 37,200. Then we group like terms whereby we are saying 9 plus 4x it becomes 13x equal to 800. It goes to the other side. Obviously, it's going to be a negative, and it becomes 37,200 minus 800. And then we get, let's try to see what we get, 37,200. Then we subtract your 800. So you to get your 36,400. Then now we can divide by 13 both sides, whereby it becomes x is equals to, let's try to divide there, we are going to get 2,800. So your x is 2,800. But then the rate for March, the rate had increased by 200. Remember, it increased 1 December 2015. So March, it had only increased by 200. So the monthly rate after it increases becomes 200. This is the monthly rate before it increased. So after it increases, now 200, 2,800 plus 200. And you are going to get your 3,000. So it means we have got 3,000 monthly. So it's going to apply also for March because it's after it increased. So we are going to remove 3,000 from the total that we have of 37,200 so that we get the only rent for that period. So we go there on the under section. So we are now saying here rent. Rent income, and in brackets we are saying 37,200, and then you subtract your 3,000. And then you get your 34,200. So this is what we have there. So you can just go there again in the question, try to see what we have next. Then after rent income, you have to check, I believe that if there was anything that is also part of income. So if we go down, you'd see that we are not having anything there. Then if we go down, you'd see that we've got discount receipt, which is our 1,740. And then you need to go through the additional information again to check if there's anything that is affected by discount receipt. If it's there, you adjust. If it's not there, you check the figure as it is. So in this case, we don't have anything in the additional information that is affected by discount receipt. So we're going to take our 1,750 and take it part of our other income. So if you come here, so here we are saying rent, we are saying discount receipt. And the amount that we have there for discount receipt is 1,740. So this is what we have. Then we go again to check if you've got any other income that we can include. We see that discount receipt is the last thing. So we can go to additional information to see if we've got any other income that we should check there. But we also have to know that there are two items that we need to assess whether they are other income or expenses. For example, we have provision for bad debt adjustment. It's one of them. We are saying a provision for bad debts adjustment. Remember, this one can be a profit. It can be an expense. It can be an income. So remember, when it's an increase, it becomes an expense. And when it's a decrease, it becomes an income. So we would want to check in this question if we have got an increase or decrease before we leave the other income section. And also you should check for trading stock adjustment, which is trading stock. It can be trading stock surplus, or it can be trading stock deficit. If it's surplus, it's an income. If it's a deficit, it's an expense. So those are some of the things that we have to check before we leave the other income section. So for provision for bad debts, let's start with provision for bad debts adjustment to try to see if we are given it in this question. Which means you are going to check your provision for provision for bad debts. What percentage are we given, or are we given as an amount? So in this question, you would see that we do not have provision for bad debts. So if you don't have, we just leave it. And then we check for a trading stock surplus or a deficit. Trading stock surplus or a deficit, remember the formula that we use to calculate trading stock surplus or deficit is we are going to say your book value of stock minus your physical stock count value of stock. Remember, physical stock count you'll be given it in the additional information, and then a book value is the figure that you're given in the trial balance, and then you compare it with the physical stock count figure to see if it's a deficit or a surplus. So if you use this formula, if you get a positive figure, it's a deficit. It means your book value is greater than the physical stock count. So what is the figure that is in the books for stock is greater than what we found out when we counted physically. So it means we lost some of the units, which is going to be a deficit. Then when it's a negative, it's a surplus. It means what we counted is more than what is in the books. So it's a surplus. So that's what we are going to how we are going to calculate it. So you can just go there and see the figure that we are given in the list of balances. So we are seeing that the figure for stock that is given there, trading inventory, which is 71,010, is the book value. We have 71,010 is the book value. Then you can go to additional information to see if there's anything that is changing the book value. You'll see that we do not have anything that is changing the book value, so we can check the physical stock count figure. So the figure stock count figure is here. If you go to this point, you see that we've got something that is changing this physical stock count. Sorry, the book values figure. Here we say, including a burglary in the shop, stock costing 24,000 was stolen. The insurance companies agreed to pay out an amount of 80,000. But what is important is that the stock of 24,000 is missing. So this one is going to reduce the figure for book value. So we're going to remove it from the book value figure. So here we come, here we say minus 24,000. And then the answer that we get now is the representation of our book value. And then we subtract the physical stock count figure that we are given again in the additional information, which is being said 45,210. So we come here. So we say 45,210. And then we see what figure do we get there. We are going to see that we are going to get a positive of 6,000. And if it's a positive, we are saying it's a deficit, so it doesn't qualify under the income. We put it under other expenses. So this is what we have. So we can now conclude our other income section. So it means we are now adding your discount received, and then we add to your rent income to get the figure total for other income that is going to come here. We say 34,200 plus 1,750, we are going to get 35,940. And obviously, we add other income here. We add other income. So you're saying 35,940 plus 162,080. And you get your figure for 198,020. And it's going to be your gross income. Right. So after that, we now go to the expenses, less operating expenses section. So we are saying less operating expenses. So this is what we have on operating expenses. Then we can go to our trial balance to check what operating expenses do we have. So we come here, we say, we check on our nominal account section all the expenses to check all the expenses that we have. We go down, checking. We have salaries and wages here, which is 34,080. 34,080. So we can pick salaries and wages, 34,080. And we go to additional information to see if we've got anything that is affecting our salaries and wages. But in this question, we do not have. So we come here and state it here as salaries and wages. And we are going to get your figure of 34,080. And then after salaries and wages, we go again down, check any other expense. We have insurance, which is 6,980. We check again the additional information to see if we have anything that is affecting in terms of adjustments, our insurance. You see that there's nothing, so we're going to pick it as it is, 6,980. Then after insurance, we are going to go down to check again if we have got anything. We have got stationery, which is 7,130. So this stationery indicates what was bought. So to find the used stationery, which is going to be our space, we say what was bought minus what is remaining at the end of the period for stationery. So what is remaining is 620. So the closing stock of stationery that we have is 620. We're going to subtract it from the figure for stationery that was bought that is being indicated in the trial balance. So we are going to say trading stock that we have there, which is for stationery, which was bought with 7,430. Then we subtract 620 of what is remaining at the end of the period to get what was used, which is going to be the expense. So here we say in brackets 7,430 minus 620. And we are going to get 6,810. Then we check again on the next expense in the list of balances. So you see that after stationery, we've got water and electricity, which is 13,460. So if you go to additional information, you'll see that there's nothing that is affecting our water and electricity. So in that case, you can take it as it is and put it in the income statement. So we go here. So we are saying water. Water and electricity. And the figure that we're having is 13,460. And then we go to check another one after water and electricity. We've got bed debts, 1,840. But for this bad debts, we've got an adjustment that is affecting our bad debts, which is saying a debtor who owed in 508 was declared insolvent. He said paid 35% of his debts, and this has been correctly recorded. The remaining balance must be written off as a bad debt. So remaining balance, that's what we are saying. It will be now 100 minus what was paid, which is 35%, and we get 65%. So 65% of 580 is the one that should be written off as bad debt. So yes, 65% as a decimal becomes 0.65, and then you multiply by 580. And you see that if you do that, there you are going to get an amount of 377, which you are supposed to add to bad debts that you are given in the trial balance, which is 1,850, to get the total for bad debts. So here we are saying bad debts you are having an amount of 1,850, and then we add 377, and then the total amount that we're going to get is 2,227. Right. So after bad debts, we can try to see again any other expense that we are going to include there. Right. So this kind of received is the last one. So remember, we also have the provision for bad debts adjustment that we calculated, and we got 6,000 as a trading stock deficit. We got 6,000 as a trading stock deficit. So on trading stock, we are going to indicate our 6,000 as an expense, which is showing a deficit. So we go there. And we are saying trading stock, stock deficits, whereby we calculated it as saying 71,010 is the figure, the book value that is given in the trial balance, minus the one, the other stock of that we removed of 20. Let's try to see 24,000, which was being said was lost due to burglary. And then we subtract the physical stock on figure, which is 45,210. And then we got our after calculating, we got our 1,800. Sorry, if you calculate it correctly, you're supposed to get 1,800. So this is what we have. But then if you go back again there, if you go back there, then again, you see that let's try to see where we have the information of that burglary. If you come here, you'll see that during a burglary, the shop stock costing 24,000 was stolen. And then we are being told that the insurance company is agreed to pay out an amount of 18,000, but this has not yet been received. So which means out of 24,000 that was stolen, 18,000 18,000 is going to be paid. So it means if we say 24 minus 18, it means we are going to have a difference of 6,000. So this one is going to be stock loss. It's not going to be paid, so it's going to be an expense again. So it's lost due to burglary. So you go there. So we are saying loss due to burglary, and we are saying 6,000. So this calculation of trading stock deficit, if you calculate there correctly, you're supposed to get 1,800. So let's try to just to verify if the calculation is a correct calculation, whereby we're saying 71,010. We subtract 24,000, and then we subtract 45,200. You're going to get your 1,810. So the answer that we have here is 1,810. So this is what we have in terms of trading stock deficit. Right. So After that, now we can try to see if we've got any other information that we have in terms of interest information. Remember, we've exhausted anything in terms of the list of balances. So we can come here and try to see if we've got any other expense that is indicated in the additional information. You can go to the next page. If we go down, so we have got this. If you go to the partnership agreement, you see that it reads this point. It reads Corey receives a monthly salary of 6,000 per month. Remember, when it's an annual salary like this one of 90,000, it's an annual salary. It's supposed to be adjusted in the appropriation. You don't adjust it in the income statement, but if it's monthly salary of a partner, you're supposed to adjust it in the income statement. So we're going to put that one under less expenses. So what we're going to do is we're going to say 6,000 per month. So you're going to say 6,000 times 12, and you're going to get your 72,000. So we go to the other section and include it. So we're going to say salary for Corey. And then we're going to get your 72,000. And then obviously we try to check again if you have got any other that we can also include other less expenses. So if you come at this point, you see that it's stating that depreciation of equipment of 12,406 must be taken into account. So we are saying 12,406, we need to take that one into account. So let's just go and put that one as our depreciation. So if you go there, you're saying depreciation. And we are saying 12,406, indicating your depreciation. So from there again, we check again if you've got any other that is listed in the additional information that we can include as our expense. So we also have interest on loan. Interest on loan, and if you come here, the statement is saying the loan from core is reduced by 5,000 on 31 July of each year. So it means we're going to calculate interest on loan before it was reduced, and then interest on loan after it was reduced, and then we can add the two interests to get the total for the year. So but we are told that on 31 July, that's when it's going to be reduced. So let's count the number of months before it was reduced. Remember, the year is starting on March, 1 March. So saying March, April, May, June, July. And then it was increased, so which means starting from August. So before it was reduced, we've got 1, 2, 3, 4, 5 months. So it means after a reduction, it's going to be 12 minus 5, because we have 12 months in a year, which are going to give us 7. So we've got 7 months after reduction and 5 months before reduction. And it was reduced by 5,000. So we can just go there to check in terms of the loan balance, and we can play around with that loan balance that we are given in the list of balance. So you'll see that we have got 68,000 at 12%. 68,000 at 12%. So we can come here. We have got 68,000 at 12% interest. And we know that this 68,000 is the balance that is at the end of the year after reduction, because the balance that are given in the trial balance is the balance at the end of the year, end of the year, which means the reduction was already effective. So before reduction, it means it was 68,000 plus 5,000. And we are going to get your 73,000. So to calculate before reduction, we are now saying the percentage that are given 12% as a decimal is 0.12. And then we multiply by 73,000. And then we make a proportion of months before reduction. Remember, we counted in the one that is 5 months. We multiply by 5 over 12. Get the percentage before reduction. So let's just try to calculate it by saying 0.12. You multiply by 73. You multiply by 5/4. So you're going to get 3,650 before reduction. Then after reduction, we are going to say 0.12. It was now 68,000 after reduction. Multiplied by 68,000. And then at the number of months, we counted and we put 7/4. Then you get your answer there. So let's try to calculate it. 0.12, and then we multiply by 68,000, and then multiply by 7/4. And we're going to get your 4,760. So this is the interest uh, after reduction. So we get the two, you're supposed to get your 8,410. So this is the total interest that you are supposed to show in the income statement. So we can just go there and include that one as our interest. So we are saying interest on loan, and in brackets we just summarize the working, whereby we are saying 3,650, and then we add your 4,760, and then the total amount that we are going to get is 8,410. So this is what we have in terms of our interest on loan. And then this marks the end of our expenses. So we can go back again in the trial balance to see in terms of our salary. Remember, we've got some figures for salaries that we are given there, Kate and Corey, and we skipped those figures. Why? Because this one shows the amount of salaries that were paid. But in the additional information, we are going to see that for Kate, the figure for salary, for Kate, it's an annual figure, and we are regarding it as an adjustment that we are going to make in the appropriation. So if you come here, you see that let's go to our partnership agreement. For Kate, is entitled to an annual salary of 90,000. It means out of the 90,000 of the annual salary of Kate, that is supposed to be adjusted in the appropriation. 60,000 was paid. So this figure that we are given here is just showing us that we paid 60,000, but we are supposed to pay 90,000 for the period. And the figure that we are concerned with is the figure that belongs to that period, which is 90,000. So that's why we skipped this one. Then for Corey, it's saying 60,000. Remember, for Corey, again, if you go to additional information, it's saying Corey receives a monthly salary of 6,000 per month, which we said 6 times 12, 6,000 times 12,000 times 12, and then we got our 6,000 times 12, and then we got our 72,000. So it means for Corey, the salary pay is going to be 72,000, and we said it's monthly, it's adjusted in the income statement, and we put it as 72,000. So out of 72,000, Corey is at the moment is already paid 60,000. So what is in the trial balance is indicating what was actually paid, but what is supposed to be charged for that period is 72,000. So out of 72,000, 60,000 is paid so far. Has been paid so far. So this is why we skipped it. These figures are not going to affect anything because they just indicate what was paid. What we want is what was supposed to be paid, which is given in the partnership agreement. So that's what we have. So unless the partnership or agreement was quiet about these figures, we were assuming that these figures are supposed to be what belongs to that period, and we enter them as they are. So this is what we have. So we can go there now and make our final calculations by adding all the expenses that we have. So we are going to add from our interest on loan going up to our salaries and wages, and you get your total, which is supposed to come in line with operating expenses, and that total is supposed to be 164,173. And obviously we subtract it from the gross income. And when you subtract it, you are going to get your net profit here. The net profit figure that we are supposed to get is 33,847. So this is your net profit figure. So this figure, we are going to take it to the appropriation account. So we can just try to move to our appropriation account and see what do we have. So this is going to be our appropriation account, and we're going to put this figure for net profit down there after we have listed all the appropriations that are supposed to be done. So we've got a column for Kate and Corey, and we are going to start with interest on capital. And we can go to the information that we have and see how can we calculate interest on capital. So you would see that our interest on capital, we are given it here. It's saying interest on capital is calculated at 8% per annum on the capital balances. So we have got 8%. So we are just going to the trial balance and try to see in terms of the balances of the capital. Then you just calculate using your 8%. So we go there. So you see that for Kate, we are given it as 264. So we are just going to say 8%, which is 0.0. 8, and then we multiply by 264. And we can just calculate it as such by saying our 0.08, and then we multiply by 264. 264,000. And the answer that we are going to get is 21,120. 21,120. So we go on the other section and put our 21,120. So we are saying 21,120. And then for Corey, we do the same. We multiply by 8%. So for Corey now, we are using the balance for capital of 176,000. So we are saying 0.08 times 176,000. And the answer that we are supposed to get there is 14,080. So this is what we have for Corey. So for Corey, we have 14,080. And we have to add the two to get the total. We get to 35,000. 35,200. Then on the next item, we have interest on current account. Interest on current account. And we go to the question again to try to find out how are we going to calculate our interest on capital. Of course, we get that information from the partnership agreement. So the partnership agreement is saying interest on current accounts will be levied at 7.5% per annum. So we are going to use our 7.5. We go there, 7.5, then we can just try to remove this. So 7.5%, and we are going to use that 7.5% using the figures that we are given there. So let's just try to see what do we have in terms of our balances for current. So we are here, we are saying 7.5% as a decimal becomes 0.075. And then we multiply by, for Kate, we start by, for Kate, we are saying for Kate has got a debit balance. So when we're having a debit balance, it means we are going to show it in the appropriation as a negative figure. So we are going to multiply by 7,880, and we are going to get your answer is 591. You can just try to verify that calculation by saying 0.075 times 7,880, and you get your 591. And we are saying we are going to show it as a negative in the appropriation. And then for Corey, we are saying 0.0757% as a decimal. We multiply by a credit balance of 10,200. The amount that you are supposed to get there is 765. So we just go there and enter the research is interest on current. So here we are saying for Kate, it's going to be a negative, which is 591. So show it as a negative because it's a debit balance in the trial balance. Then for Corey, 765 is a positive. So to get the total here, we are going to say negative 591 plus 765. And then you get the total here, which is supposed to be a positive 174. So this is what we have. Then on the next item, after interest on current, we have got salary. And then for salary, remember we said salary which comes with appropriation is the annual salary that is given in the partnership agreement. So you can just refer back. So if you come to a partnership agreement, you see that Kate is entitled to an annual salary allowance of 90,000. So this is the one that is going to come in the appropriation. For salary, we are only going to put it for Kate. So it means for Code, there's nothing, but for Kate, we've got 90,000. Right, so this is what we have. And then having done that now, we are now supposed to adjust for share of profits. So we are going to, the share of profits, we are going to transfer it to the current account. So here we can just create another row for current account. That's where we're going to post our share of profits. So in brackets, you can just say share of profits. If there are losses, you say you are supposed to indicate that it's share of losses here. So this is what we have. And then after that now, that's where we are going to put your net profit figure. So here you can leave it blank because the calculation is going to be based on the net profit figure. So net profit, you put that figure in line here at the end here under the total column. That's where you're going to put the net profit figure. So if you go to our income statement, that's where we are having our net profit, which is 33,847. And then here we're saying 33,847. So we are going to calculate the figure that we are going to share for profits from this figure. So how are we going to calculate it? We are going to subtract all the appropriations and aids where necessary, and then we get the net figure that is supposed to be shared as our share of profit. So if you come here, you'll see that here we have our 90,000, which we are supposed to put here as a positive. So we are going to start with 33,847. So our calculation is going to be like, let's just try to put it down here. For our calculation, we are saying 13,847 is our profit, net profit. So we say all the ones that are indicated, all the ones that are indicated as positives, we are supposed to subtract them. So we're saying 13,847 minus 35,200 minus 174 minus 90,000. And then you get your net figure that's supposed to share this profit now, which is supposed to be 91,527. So it's going to come here, it's 91,527. So this is the figure that we're going to share between the two partners. But we go to the partnership agreement to try to check in terms of the profit sharing ratio. So they are saying in the last point, the remaining profit or loss is distributed in the ratio of 2:1 for Kate and Corey. So basically we are saying 2:1. So this one is for Kate and this one is for Corey. As simple as that. So we go there and try to apply that one. So it's 2:1. So we can just try to bring it down by saying 2:1, and we are saying it's Kate and to Corey. So obviously we want the total there, 2 plus 1, we get 3. So for Kate, we are going to say 2/3. For Corey, 1/3. So let's start with Kate, whereby we are saying 2/3 times the figure that is supposed to be shared is 91,527 over 1. We calculate it as such. Let's try to see what we get there. 2 divided by 3 is 2/3. And then we multiply by 91,527. You're going to get your 61,018. And then we calculate for Corey. We are saying 1/3 times 91,527. You calculate it as such, you are going to get your answer is 30,509. So these are the figures that we are going to enter there, whereby we are saying for Kate, we have 61,000. Sorry, not in that column, not in that row, but we can put it here, where we are having our profit that is supposed to be shared, whereby we are saying 61,018. And then here we are saying we got 30,000, which is this one, 509. So this is how we have prepared our appropriation account. So coming here now, this is our appropriation account, and we've shared our profit. So when we've created our current account, we're going to post this share of profits there on the credit side of the current account. So current preparation of the current account is another video that is going to come after this one, is we prepare the current account. But basically the figures that we're going to put in the current account now will be taking them from this appropriation and just put them there. Of course, there are some additions that are going to be there in terms of the total amount for drawings should be now also integrated or added in the current account, which doesn't appear in the appropriation. And also the figure for interest on loan, also we are supposed to see it now in the current account. So this is what we have, guys, according to this video. Those of you who are subscribed, please subscribe and share. Let's share the link to our friends who are doing financial accounting at 5. As for this video, I'm signing out. We meet again in the next video.